The long-awaited events finally took place. Thus, the key central banks such as the Federal Reserve, the European Central Bank and the Bank of England announced their decisions on the key interest rate and plans for the monetary policy changes. Now, traders are revising their strategies in accordance with the received information, and they will also take into account macroeconomic reports. In our video review, we will find out what publications may affect the market sentiment early next week. On a Monday, traders will learn about the consequences of the ECB's tough monetary policy. On Thursday, the central bank decided to raise the benchmark rate to 3% per annum. Thus, at the next meeting, it intends to increase the key rate by 50 basis points. Meanwhile, consumer activity in the Eurozone is causing a lot of concerns. The key economic sector is suffering from expensive loans, and consumers do not spend a lot of money even during the Christmas period. The fact is that people expect a recession. Thus, in December, Eurozone retail sales may show a decline. Analysts foresee a drop of 1.3% on a monthly basis, whereas on an yearly basis, the indicator will demonstrate the same decrease of 2.8%. Meanwhile, Canada's PMI data may encourage traders. The indicator may show a rise. In January, business activity is likely to revive after a tumble in December. If the predictions come true, the Canadian dollar will have a chance to inch up against the US dollar. On Tuesday, it will be the turn of the Reserve Bank of Australia to disclose its key rate decision. In December, the regulator raised the benchmark rate by 25 basis points. Unlike other central banks, the Australian one has faced serious problems. In the Eurozone and the United States, inflation is slackening amid higher interest rates. In Australia, the situation is the opposite. The recent data unveiled that inflation has not reached its peak yet. It's obvious that the central bank should take different measures. Traders may find some clues in the Reserve Bank of Australia rate statement that will follow the meeting, scheduled for February 7. Also, on Tuesday, the US will disclose its trade balance data, which is quite interesting for traders. The trade deficit is expected to advance because of a rise in imports. Traders should keep in mind that China is the main trading partner of the United States. After 3 years of restrictions, China is reviving its economy and increasing production, and this will influence the supply of Chinese goods to the United States. The key aim is to meet consumer demand. These factors may boost risk sentiment among traders, and the fact is that the economy is getting back on track. Meanwhile, the US dollar is a safe haven asset, may suffer pressure. The upcoming week will not be very rich in macroeconomic events. That's why traders should closely monitor the news flow. Subscribe to our channel to keep abreast of the latest news. In our video reviews, we cover the financial market events and analyze the market situation together with the analysts. Stay tuned, it will be interesting.